How to start investing in ETFs to build some passive income. Now guys, I will be honest here, just to clarify, this is not a video to get rich very quick in 3 days, but if you do find a video like that, let me know, send me a link, and I'll start watching it too, because I'm interested in finding out how to make so much money in literally 3 days, and not with Bitcoin, okay? So don't even comment that. But guys, in this video, I will be showing you the best ways to invest into ETFs to actually build some passive income. And no, you don't need $1 million or $1,000. You can actually start with $5. Doesn't really matter whatsoever. I will be showing you multiple ways to actually do it, from if you have a lot of money or a little bit of money. Doesn't really matter. It's all about building some passive income and actually getting started while investing in ETFs. So don't worry if you don't have a lot of money, and don't worry if you do have a lot of money. It still applies no matter what. And on top of that, if you guys don't know me, my name is TommyBryson. I'm an accountant. I upload every single day. Subscribe to the channel, hit the notification bell so you get notified every time I post a new video, which again is every single day. And hit the like button while you're at it. Really appreciate it. I want to ask you guys a question. How much passive income is enough for you to retire right now? Like, how much money would I have to give you recurring every single year so you can actually retire right now? Comment down below. Let me know. And for me, it's around like $60,000 to $50,000 and I'm good to go. Okay, just passive income, I'm good to go. I probably still won't retire whatsoever, but if I had that much money coming in, I knew for sure that I would be 100% safe no matter what. Comment down below, what's your number? Now, the first thing I want to break down is, well, Tommy, what is an ETF? I don't understand it. Well, the answer is this. An ETF stands for Exchange Traded Fund, and it's very simple to understand, okay? Imagine you have a theoretical basket, meaning that it doesn't exist, okay? You have a basket here full of fruits, right? And these fruits represent stocks, commodities, bonds, all that fancy stuff. And I tell you, like, hey, you can either buy all these fruits, which will cost you a lot of money, or you can buy a piece of the basket, and then that way you actually own everything that's actually in there. So in reality, you're more diversified by owning the basket than just by buying each one of those fruits inside of that basket, like, you know, like stocks and bonds, okay? That's how it works. So basically, an ETF is basically a fund filled with different stocks that diversifies you, and then that way you take less risk. Comment down below and let me know. Does that make sense so far, or did the fruit basket example just leave you hungry? Comment down below, let me know. So now that we understand what an ETF is, plus we know your financial passive income number and all that fancy stuff, well, before I tell you exactly how to build this passive income, I want to share with you guys, well, Tommy, how do I actually invest into these ETFs, right? And the answer is this. It's very simple. You can actually do either two ways, the old traditional way, or you can do financial apps in the 21st century now, which more than often are cheaper. So for example, you have Robinhood, you have Wealthfront, you have Acorn. These are all options. For example, Acorn, you buy partial shares. Wealthfront, they charge you a management fee to buy all these things, but they also have like tax evasion. Not tax evasion. Oh my gosh. Tax loss harvesting. It's not tax evasion. I'm sorry about that. On top of that, we also have Robinhood that lets you buy, like, you know, like ETFs also, but it's not fractional shares, and they don't charge you any trading fees. But again, it's gonna cost a little bit of money, because again, these ETFs sometimes cost between $40 all the way up to $300, so it can get really expensive. But if you want to buy fractional shares, then Acorn is the way to go, and that's how I actually do it. Again, Wealthfront does not do tax evasion, they do tax loss harvesting. It's a completely different thing, okay? And by the way, if you want a full video on all these apps, just comment down below, let me know, and I'll get to work. And here's the second way to actually get this done, the old-fashioned way. Well, before we had Acorn, Robinhood, Wealthfront, well, before these companies came up, we actually had brick and mortar, in a sense. Like, you know, E-Trade, they charge you trading fees. They also have like free ETFs on there. But again, they have minimums of like $500 to actually start investing, which is pretty high for some people out there. So E-Trade, kind of cool. I did that before, but not really my thing anymore. Then we also have Vanguard. You know, Vanguard is where most of these funds actually come from, and they're very popular, and they don't really charge you that much. But again, there are no fractional shares, there are no minimums, and there are no trading fees for ETFs. But if you do call over the phone, like the old-fashioned days, they charge you like around $25 per share. So you definitely want to do everything online. But again, there's a lot of options on there. And on top of that, well, you know, how do I say this? No fractional shares means you're going to have to pay a lot of money for this type of stuff, okay? And if you don't have a lot of money to start investing, well, it's not really the best recommended one out there, because you can't really get your foot in the door. So Vanguard, kind of expensive if you ask me. But we also have TD Bank. Well, now these days, guys, we also have TD Bank, Chase, BOA, all these banks are trying to get into the game also to get a piece of this pie. But here's the deal. They're doing it all wrong, just like they do savings accounts. And they're basically trying to charge you trading fees of like $7 per share. So it kind of sucks. So here's the question, guys. Which one of these would you actually pick? Would you pick E-Trade, Fidelity, is it Vanguard, or is it like, you know, the financial apps like, you know, Acorn, Robinhood? Which one would you pick? Comment down below, let me know. But I do want to tell you right now which ones I would pick. I would pick like probably like Acorn for like ETF investing. And if I wanted to do like individual stock investing, I would probably go with Robinhood because again, there's no trading fees on that. So that's pretty cool if you ask me. But comment down below and let me know which one would you do and why. So now that we know what your passive income number is, what an ETF is, how to start investing into it, and where to actually start investing into these things. And now I actually want to talk about, well, tell me what are the pros and what are the cons of investing into ETFs. I'm going to answer this right now really quickly. And here it is. Some of the pros are this. You have less risk. Why do you have less risk, Tommy? Well, it's because you're diversified. Remember that basket example? Well, if you only have one stock and it goes down, you just lost all your money. When you have an ETF made out of like 1,000 stocks in there, then what happens is this: if one stock goes down, it doesn't matter. You still have around 999 other ones. In reality, you're still safe by diversification. Now, another pro is this: it's less work. If you don't know this, picking one stock takes a lot of work. It takes like Warren Buffett like an entire year just to pick one stock. So it takes a lot of work. But with ETFs, you don't have to do this. Why? Because you're diversified, and on top of that, you're not trying to beat the market. You're going with the market. So you get an average of like 7 to 12% every single year. So I really prefer that instead of doing the work and all that fancy stuff. Now, we also have a lower cost. If you invest into mutual funds, they charge you a ton of money in management fees. But with ETFs, they charge you between like 0.08%, which is pretty low, to all the way up to like 0.50%, which is still pretty low if you ask me. But again, my funds, my ETFs only charge me around like 0.30% and below. Okay, so they can get pretty cheap and pretty cheap and pretty cheap. By the way, Tommy, 1% isn't that much from a mutual fund. The answer is this: yes, it is. It can cost you over $100,000 over 20 years because of compound interest and also opportunity costs. So do some research on that because again, it can get very expensive really fast if you don't know what you're doing. But like everything, guys, everything has some cons, so not everything is perfect. So Tommy, what are the cons? Well, too much diversification means less room for growth. What do I mean by this? You know, if I have one stock and it grows like crazy, like Amazon, like I bought it back in 2000 and it grow like now like $2,000, right? Well, I just grew my money by a lot of money. But when I have like diversified stocks and you buy like this entire basket full of stocks, when in reality, you can't really grow your money like beyond, you know? It's kind of like more like, okay, 7 to 12% every single year, and you kind of just got to be happy with that, you know? Because this way, you get less risk, more constant returns, but not like crazy growth. And again, it is low risk, and low risk usually means less returns, you know? And you gotta ask yourself, like, you know, am I into risk or am I into consistent returns? For me, it's consistent returns over time. That's what I like to do. But you let me know in the comments down below, what do you like to do? So if you made it all the way to the end of the video, which is this part, it's time to talk about the passive income way, okay? Tommy, how do I build passive income by investing into ETFs? Tell me right now. Tell me right now. Well, I'm gonna tell you right now, bro. Relax. Well, here it is, guys. The first thing is this. This is not overnight. It's going to take a lot of work, a lot of time, and a lot of money. Don't get scared. It's over time. It compounds on itself. So eventually, that money keeps compounding and compounding and compounding until it becomes this big amount of money, okay? So don't worry about it. It's not a lot of money right now. It's a lot of money in the future because you keep reinvesting and reinvesting all your money. So it's perfectly fine. Don't worry about that. Now, the second thing is this, guys, right? All your passive income is going to come from dividends, right? Because you're never really going to sell a stock because you want to build passive income, not sell it, realize it, and pay taxes on it. You want to avoid that by all means. But not by tax evasion, by doing it in a legal way, just by holding, you know? It's paying tax on the dividends, but never on the real money because you never really realize it completely. Now, here's what you do, guys. To use an example here, you can actually get paid monthly or quarterly. How does this work, Tommy? Well, the answer is this. You can actually invest into the S&P 500 VO by Vanguard. The ticker symbol is like VOO. And they pay out around like $1.50 every single quarter. Now, every single quarter means every 3 months you get $1.50 per share. Now, you might be telling me, Tommy, that's nothing. That's nothing, bro. Nothing. Well, now you'll be surprised because the cost of this entire stock is around $250. By the way, it's an ETF, not a stock, just to clarify again. But it's around like $250. So it's a lot of money to invest only to get back like $1.50 every single quarter, which is like what? Like $6 every single year. Not that bad, but still, $250 for $6. It sounds ridiculous, but eventually it keeps compounding and compounding, so don't even worry about that. But There's also treasury bills. They have treasury bill ETFs that pay you every single month. Now, I have some of these personally that pay me every single month around $1.25. But in reality, I only have like around like 6 shares, so $1.25. I'm just trying to like build it up and build it up and build it up. So in reality, by the way, I did some math, and it's like around 2.35% you can expect by investing into these like ETFs over time in dividends every single year. So for example, I invest with Acorn, and my Acorn portfolio pays me around like 2.35% in dividends every single year. So for this year, for like $7,000, I can be expecting around like $165 back in dividends, but in growth, I can be expecting around 7 to 12% in growth, which is pretty cool because at the end of my investing time, well, I'll tell you right now how much money I'll actually have in that account. And the best way to tell you is by doing some quick math. And here we go, guys. Well, I invest around 6 to 5% of my income every single month, which is around like $500. You might be telling me, Tommy, that's a lot, that's a little, depending on your situation. But in reality, that's my figure, that's my number, that's what I'm comfortable with, so that's what I do. So here's my thing. I invest around $500. I'm planning on saving this money for the next 30 to 40 years. By that time, I'll be like around 52, which is fine, not that old. And here's my thing. By investing $500 for the next 30 years at a 7% growth rate every single year and getting back like 2.35% in dividends and reinvesting that also, I can be expected to have around $1.8 million in that investment account. By the way, this is my math. I did all the math myself, and I also ran it through like the entire system on Google, so I know I'm fine. But here's my thing. I can be expected to make around $4,000 every single month in dividends from $1.8 million. So again, it takes a lot of money to get some returns on dividends from investing into these ETFs. So that's why I always say, this is the long-term game, not the short-term game, okay? If you want to do this like short-term, like really quick, it's not going to work. It takes a lot of money, a lot of time, and a lot of patience. So here's my tactic to actually do this. My first rule is this, guys. I only invest around 5% of my income. I live on like around 17% of my income. By the way, I have videos on this stuff, so you can check it out on the channel. But here's my thing. The rest of my money goes into my business and making more businesses and making more money. Because again, the stock market to me, ETFs is just like a plan B for me, just to have some income saved up for the future. Because at the end, when I actually sell this stuff, if I ever do, you know, because I don't really plan on selling it at all, but in the future when I'm like 60 or like 70, I plan on having around $11 million or $14 million in these accounts, okay? That's my plan. And by the way, remember this, it's only 5% of my income. So my income keeps growing and growing and growing every single year. So eventually, that 5% can turn from like 500 to 1,000 to 2,000, depending on how much money I actually earn. So in reality, it all depends. But here's my recommendation, guys. If you want to get started, I would use Acorn. I have a link down below. You can get started today for $5. But if you don't like Acorn, there's a whole bunch of different options. All the links are down below on the channel also. And if you want to see full videos on those entire accounts, just let me know in the comments down below and I'll get to work on them. And as always, guys, thank you for watching the video. If you like the video, go ahead and like the video. Really appreciate it. And if you want to talk to me one-on-one, uno, just DM me on Instagram. Don't forget to subscribe to the channel, hit the notification bell so you get notified every time I post a new video. And if you want to watch more videos, like for example, how much money did I earn on 6 months of investing on Acorn, click this video right here. If you want to subscribe right now, click my face right here. And I'll see you guys tomorrow on the next video. Thanks for watching, and peace.